Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the week of October 14th, which will be Columbus Day, which means the bond market will be closed, but the stock market will be open. And I think that's going to be a good thing for the stock market. You know, sometimes we see these holiday sessions, these quasi-holiday sessions, lighter volume, but the bias is usually to float up type of trade, but we'll see. I'm excited going into next week because we rocked this week. It was really a interesting last 2 weeks. We know what's on. You know, I'm not going to go over and just go through what's going on. Everyone knows there's an issue with Congress, the Senate. Everyone getting together on the same page and somehow resolving the conflict they have on the debt limit, the budget, and the shutdown in Washington. And this has affected the markets. This has affected the markets in a way that the market has actually broken down through a major trend line. Now, one thing that I always stress, and I've done this years, going on 20 years, is when you have something that works constantly, it usually continues to work. And the reason it doesn't work, there's usually a reason why that happens. The market turns over, or technically there's a reason. So we broke down through this trend line, but this happened the same time all this government issues were going on. And the market was focused on it. That's all you heard about it. And we see that selling pressure. And you can see it in the market. You feel it. You know it. You got that feeling. It's like, Jesus Christ, what's going on? You just don't know where it's going to go. And you get that fear. Like this thing can go into something bigger, but for some reason we feel like we're oversold and this can get resolved and we're kind of in limbo. But the limbo didn't really stop the indicators lining up. We did have an oversold level. We broke down through the trend line, which I didn't really give much credit to because of the news event that really caused that. The other times we broken down out of patterns, we could pretty much go to a reason why we broke down out of a pattern. Be it individual stocks where we had some news, earnings, something like that, or a market moving news that moves the overall markets. So I talk about it all week, how whenever you do break through a support line or a channel line, a trend line, lots of times you'll see that reactionary trade right back into the original pattern. And in this case, we saw that happen in a lot of different stocks, but most importantly, we see it here on the S&P 500, big spike back up here. This second candle right here is not a good representation of this candle. It should actually just close up here, and it's a follow-through. The stochastics are a true read on here, and that's why I'm going to show you a different version of that chart. Here we go. Here's the S&P, and you can see the follow-through here. So what I'm going to show you is this underlying trend line. It goes back basically a year. We're going to zoom in, and we're going to take a look at this, this little breakdown here. But what happened is we got oversold on the stochastics. Now, I have my standard stochastics, usually 14.33, 14.43. It doesn't make a difference on that smoothing factor, but basically that time look back here, that 14 period, is my go-to on the daily, and it kind of gives us a good level. But I also use the 44.4 or 44.3 on the on my 1 minute chart. So when we kind of give us the dual stochastic setup, and I never really talked about the how you apply that to a regular daily chart, but you could actually do that, and I want to show you that in a second. But the important thing is this nice bounce, the nice follow-through, and what's happening here is this rising wedge pattern. We had a conversation today on the radio, and some people were asking about the possible head and shoulders formation forming. Now, head and shoulders formations are topping patterns, meaning that you want to be at the top of a move, and this qualifies for that. Definitely qualifies for a top. What we need to see, though, these stochastics here pretty much get back up here, give us some sign of a divergence. Right now, this is a trend that's continuing to move higher lows and higher highs. And when I explained what a divergence is between that, as the stochastics became oversold, we bounced and we made a new high, from the recent high. Then we pulled back and the stochastics got oversold again, but the price maintained a higher low. And the same thing, rotation back up, overbought, higher high. Rotation back down, oversold, higher low. Even though we broke down through this trend line, technically it wasn't anything really big other than that trend line, and it was done because of a news situation. And these patterns, typically a wedge pattern like this, typically you don't come shooting right down. What happens is you do put any type of upward channel, you normally do put it a head and shoulders formation. That's why you see head and shoulders formations as a lower right shoulder, and that's a failure of that channel line. And I explain that a lot on the radio, but you can see it right here. Let's get a piece of, like, if we start to roll back over here, yeah, there's an argument there for a head and shoulders formation. You can see that left shoulder, the head up here, and possibly the right shoulder, and a slanted neckline, but the neckline already broke down, so normally we're not counting that. So what we have to see here is if this fails, and if this starts to fail, we're going to start to see this roll over, then there's a good possibility that this pattern does play out and rolls over. But right now I can't really call this a head and shoulders. I'm more concerned about the rising wedge, and what I would be looking for in this market is the market to make new highs. The market tends to make new highs and then pull back and usually get a correction after you get a blow off, not even a blow off top, but usually after, when the market least expects it. So, we get through all these issues come into the, November, December trade. Market pushes up here, makes new highs, and what's going to happen, what I would like to see happen is we move up to this trend line, which is basically right above us, wherever that is. I have to map it out on the other charts I have, and I'll give you an exact number as we move up closer to it. But it's going to be above 1725. It's going to be above the recent highs, and from that point on, I would like to take a pretty decent hedge to the downside and kind of protect myself if we are still in our longs. And I think that would be a great opportunity to watch that market up at that point. I'm not going to say that's where we're going to top out, but that's the really important level I would say is a good target. We called a target over here. Remember we said 17. What was that recent target we looked at on this move up? It was probably 17.10 or something like that. Then it pulled back. It just got oversold. Moved right back up. Pulled back. Now moving right back up. It seems like a healthy market other than a lot of negativity in the overall political agenda and the world out there. But the market seems to be taking it in stride. So that brings us to next week. Again, Monday, lighter day, maybe lighter volume. Bond market is closed. Maybe a levitation here in the markets. Maybe there's news out. Remember, news is still going to be a focal point in the market. I mean, if there's a breakdown of talks or something, the market goes kapooey. We're going to get a selling spurt. If there's continued good news, I'm going to expect this to continue to make new highs. And from that point, we'll take that next level. So right now, we're looking at highs coming up. Unless we see that divergence, we get oversold, we can see that the price is not pushing through that recent high, but we'll have plenty of time to see that. News is another thing. Sometimes it'll come out of nowhere. I'm actually putting together a video that should be released hopefully this week on how to take advantage of the correction if we do get one in the market by using some of the higher leverage ETFs. And I want to actually do a good video on that, because I know when we do go short, it's some stocks are good to go short with. It's kind of hit and miss with that. But if you're going to go short the market, you might as well go short the market. So I'm going to show you how to do that. So let's kick it off. All right, let's kick it off. I want to first of all go over some of the great setups that you're going to be seeing this upcoming week, and it's every week I said I'm going to continue to try to bring you the best setups possible. Again, quality names, the stocks that we pay attention to, we wait for it, we have patience, and we take the shot when it's there. We're not trying to, pay too much attention to the news, because, as you remember in CBS was crap in a storm the other day, and we were able to step right in there and pick it up and then look at it. Quality name. All you have to do is wait for those opportunities. Understand why the opportunity is there. News-related event was shaking this market down. And when that market gets that shakedown, these are the first things that really spike up really high. Stocks that are recently at the highs, and, hey, good company. So we were able to salvage a trade here. And again, another important thing is not to trade over your means. Especially in a market like this, it gets so volatile. You might have a big position betting on something, the market goes against you. You don't want to be taken out of this market. It's much easier to hit the singles, feel comfortable with your trade, instead of going for the home run and then having to go sit on the bench for a while to gain to get back into the game. I love the scaling process, especially on the HPS setups, and I want to explain some more of that later. But that was a good example on CBS because we know it's a quality name. Understood there was news here, so what I did was started 100 shares here. It did drop off of news. I wasn't really disappointed, and I understood there was a level down underneath us, and we actually picked it up there, right off of 53, right off of 53.10. Brought my cost average down to 54 and change, and well, you can see it's at 56 now. So being able to get into a position and not have to worry about if it does go against you, because it shouldn't go. I mean, on certain instances it will go against you. News events, downgrade. There is outside influence, but if things are looking like they're gonna, it's just continue to pattern out, and this is where you should step in. Try to get rid of that fear in that area and step in there. And that's that's how you want to see that work out. So we did that a lot this week. The Visa, the same thing. This was strictly a daily stochastic setup. I got oversold. It sold off. We picked it right up, and boom, off to the races it went. And a lot of these were dual stochastic setups too. And what I mean by dual stochastics, we went to the 60-minute chart, oversold, and the daily. And when I see that, I know it's not going to be too many days, or at least maybe even too many hours before we start to see a reversal. Even if we did break down into this channel, don't get scared of these channels. Just because we broke down doesn't mean it's usually a good opportunity when you get a breakdown like that. All right, so Visa, really good setup there on the dual stochastics. And again, recognizing a quality name on the pullback is what we want to continue to do. A lot of great names came into the room this week. Limited was one that came in yesterday. And I didn't pull the trigger on it, but the fact was the people who were bringing it to my attention, had the right outlook, quality name, selling off today. Look at the reversal. You're oversold. This is really the key right here. It's just that was the key. Once you get down into this zone, and you probably time this with the 60. I didn't even look, but I bet you could see that the 60 was kind of embedded. I mean, it would have been, this thing was selling off pretty good. But it was oversold. I mean, you knew that 60 was ready. Let's go to the next one here. But Visa, IBM. Again, here's a nice rotation on IBM, especially a stock like IBM, which has a lot of institutional interest in it and stuff. And you could see it actually have a wave action. You have a little wave up and a wave down and a wave up and a wave, up and a wave down. But once you get down, if you're looking for that long and you put all the pieces together, which I was doing on this, was I was understanding that we had a lower trend line, we have an oversold daily, I oversold 60, and we had the oversold daily. So it was a good level to buy into that level, and that's why we had, 3 points on that. It would have got, if you still held on to it today, I mean, from where we got in to where it is now is the 7 points. But I also understand there is a mentality out there, not mentality, but just sometimes when you hear all this bad news and they're just talking about debt, if we default and stuff, it's difficult to step inside, that. That's why I said small shares, because most likely you're going to end up getting, when you buy into that weakness on a quality name, and it's a big, you can really see it on the chart, and you've really deviated away from that 20-period moving average. Even if you get in late, you have, first of all, the good chance of just pushing back up there. But even if it moves down a little bit more, you start bringing that average down a little, and then you got a rocket ship, ready to move on you. So never try to take that big first position. That's just my opinion from my experience. MPC, we were recognizing these downward channels a lot, and also understanding that sectors tend to move together. So we had this whole sector, the whole refineries, were looking pretty good, and it was based off the 60-minute chart here. But anyhow, it did run yesterday and today, and we took it off for a nice profit. Beautiful setup on that. And again, the ExxonMobil. If you remember at the trade in the ExxonMobil, the ExxonMobil, I marked it out on the reason we got in was, if I could find where I marked that out, it was on the, was it on the 15? Was it on the 60? I thought it was on the 60. It was on the daily. ExxonMobil. We had a very, very good level to get on ExxonMobil. We took advantage of that. And it was this right here. It was this underlying trend line. It went all the way out. I don't know why it didn't stay there, but was touched multiple times, 2, 3, 4, 5, and then we had that reaction down on Chevron, and we picked it up right off that trend line, because that's usually an opportunity. It's a peer pressure opportunity. A stock that gets taken down because of mid quarter update out of Chevron, talking about maybe some costs and stuff. But anyhow, put some pressure on ExxonMobil. It was an opportunity. Look at where it is now. Great opportunity. Congratulations on that trade. MTB, we took that off today. This was a classic coil stochastic setup for this week. I took that off today. Very organized, very nice setup. Took a little while, in this, it wanted to get going. Right here, it did. But what happened here in these 2 days? Bad news. So a lot of stocks here just got stalled out here the last couple of days because of the bad news. But the fact is, this was going to take off as scheduled before we got delayed. And now it did take off. So MTB, we took that off for a profit today. Cliff Natural Resources, I actually took that off, have the calls and that, but it's working out pretty good. I took my common off, and then I realized it really started just taking off. It's a double bottom here. There was news out on Consol Energy today. Consol, CNX, a coal company, had rumors of a buyout coming its way very soon, and that popped. So it did help a lot of the coal and that sector. Really got a nice lift today. CBS. We talked about CBS earlier. Got that. HTZ. Well, HTZ, I took it off. Didn't get a profit on it. We got in on the move down. It actually moved up, and I didn't take profit. So it came back down and ended up getting out of it. And I said, well, you know what? It seems like it's tired. But look at it. Now it moved up here today. It would have actually worked out good. And this is what I recommend everyone doing in market conditions like this. Over the last 2 weeks, or another week, but really the last 2 weeks, we've felt the unease of the markets and really a bias to the downside. Even though the HPS setups were setting up, you might have been so choppy that you've gotten chopped out of your trade, or you just didn't deal with it. In some cases, the stock might have actually moved lower. Usually after about 2 weeks, I like to go back and take a look at my charts. Take a look at the entries and the exit and look at the price today. And that usually 80% of the time, that's 80% of the time of the ones that didn't work out, are usually higher than when I got them, And at the stop is really the key area right there, because for me, people want to have that stop, and for me it's always moving. It's always flexible. It's like it really depends on market conditions, and if the pattern's holding up, is there pure what's out there? Is it relative strength? It might come down to the stop, and all of a sudden I start to feel like we're starting to get oversold, and we're getting some signals that we're oversold, but it's already down by the stop, and it's difficult to say which stop is going to be the best stop. But wait 2 weeks, go back, take a look at the trade, mark it out on the thing, say, all right, I got in here, mark it out, put it arrow, hopefully have a good charting program. TradingView is very good for this. I use that for my thing, but just mark it off, say, we got in here, and then down the road you could look back and say, well, you know what, I got in here, it was some weakness, it waited 5 to 7 day pullback, and then it popped. It did work out, it pulled back, but it still really worked out. And you could kind of analyze your trade and go back. I mean, I do that every week when I do my research. So I go back to every one of my trades, and you learn from them real fast that way. All right, Kellogg. I mean, this underlying trend line could be a play on itself. This is part of the HPS. What we call playbook plays. It's called a lower channel bounce. In some cases, you don't have a channel. All right, so lots of times I use this as a lower channel bounce, thinking that there might be a channel line up here just to kind of recognize, but a little more advanced. The thing is, you really sometimes don't need that upper channel line. You might say, well, this is not a channel, but you know what? This is the important one. You know, you keep on coming down to this level, and you could identify that level. And once you get to identify, you identify that, and you have just the 1-2 combination. That's your main thing you want to go by. Having patience, waiting for this to line up with this. So this is always a chart bounty. If you find an underlying trend line that tags more than 3 times, or at least 2 times, but you're coming down to that 3rd time, now it's a chart bounty. That's what you want to concentrate on. This needs to line up perfectly with that. And then we're starting to talk about the quality name, and then we can start breaking it down on some other things. But mostly, this is really the combination. It really gets that simple. You know, what this is doing for you, it's giving you patience to wait for those setups that have a better probability of working. Those who just, attempt to trade each and every day, you could do that. You could do that on smaller time frames. But I find you get a much better move when you get everything lined up. And you can see that the same thing on the intraday charts. If you have more of the time frames set up, if you have a dual stochastic on the 1 minute, you get a nice little bounce off of that. But if you have the dual stochastic on the 1 minute and the 5 minute lines up, you get a bigger move on that. And if you get a dual stochastic on the 1 minute, 5 minute, and 15, or the 60s lined up, usually you got a nice change of a trend or a significant move lining up. And that's how you have to take it day by day. You have to have the patience to, let those setups come. It's not going to be 100%. Like I said, there's outside influences. You could be in a crap stock. You could have some kind of, issue with the company or downgrade and just something like that. But the majority of the time, if you're going to go, you're going to go for it. You got to, swing at your pitch. There's so many analogies. Another analogy is, you could go for all these, fancy setups and stuff, but I want to just continue to give a layup. If I was the best layupper in basketball, or just the best single hitter, knowing where to get your pitch, how to protect the plate, what's the best thing to keep you in the game. This is what we want. This is what keeps us in the game. All right. There's nothing better. That's why I'm like, this is great. This is not, I don't feel like I'm just making up stuff here. I'm not. This is proven. You see it every day. You see when I mark it out on the 1 minute, 5 minute, 60-minute charts. You see the reaction of it. This is what's great about it. Try not to look further. Always look. Always, test yourself and stuff. But just remember the basics. When it comes down to the basics, you want to, understand the directional trends, the momentum, which this is really a good read on momentum, and these underlying levels, the 1, 2, 3 pattern. Understanding where possible trades lines up because of the 3 other pivot areas. So I talked a lot about that. You could tell it's very important going into the market, even if there is no setups in the market. You wanna realize those setups will eventually come, and just hang in there. But there is setups, and that's what we're going to talk about now. All right, let's get to that right now. And at this point of the video, I usually start a new video for the members' watch list, which the new setups, the new trends, the new areas by interest are all put out there. So if you're interested in it, come to Day Trading Radio and check it out. There's a 2-week free trial. It's very cheap, and we have a great selection of traders in our chat rooms, and the trading rooms. It's overall a good experience and a great dashboard too. So, all right, so that's it, and I'll talk to everyone Monday in the markets.